All right. It is a good day, and I have the pleasure today of sitting with a true professional that has really been helping the El Paso and Texas community with credit. I'm sitting with the founder and owner of Texas Credit Consumer Services, Mr. Edward Araujo.
Hello, hello.
Thank you for being here with me today.
Thank you for having me. Thank you for having me.
So I really wanted to get you on early in the year, Edward, because like I mentioned, early in the year, I'm sure you see this too. In my field of work, I see that at the beginning of the year, people are really motivated to get their stuff in order, so to speak.
Hmm.
And as the year progresses, especially towards the end of the year, I feel like the motivation tends to start subsiding. And
Yes.
so my goal is to really just through this conversation make people aware that there is always help out there and it's closer than what they think a lot of times.
Mhm.
So before we dive too deep into credit, can you give them a quick intro about who you are and how and why you got started in credit?
Yeah, definitely. So, like you said, my name's Edward Araujo. I'm the founder and president of Texas Consumer Credit Services. Texas Consumer Credit Service has been around since 2014. I've been doing it for a little longer than that, so probably close to 15 years. And really, I've always been kind of an entrepreneur, right? And one of the things going through entrepreneurship, and I've always been an entrepreneur and been involved in businesses, more a lot on the sales and like admin and finance side. And
Mhm.
a big thing that kept on coming up was always credit, right? Whether as an individual, as a real estate investor, as a business owner, there was always a thing about credit, and it's something
Mhm.
that always intrigued me because I was always curious, how do these uh, companies do it, or how do individuals do it, and how does credit work? Because I don't remember them teaching me in school,
Mhm.
right? So that's what really, yeah, I've always been in finance, but that's what got me started, kind of the path of really focusing on credit itself, because it's its very own individualized, specialized part of finance. Whether
Right.
with mortgages, credit impacts you for mortgages, business loans, auto insurance. They check your credit for jobs, for security clearance, government job, military job. So that's kind of what really got me going. And then once I got into the industry, I really niched down into the real estate and mortgage sector, I guess you could say.
Okay.
And the reason was because I saw a need to where uh, you see it all the time as a realtor, clients being denied because of credit,
Right.
right? And in my eyes, I didn't think they were being serviced correctly, or
Mhm.
there was information, or an outlet for them. And those clients were really the clients that were serious about working on their credit, because a lot of clients, we've worked with car dealerships and things in the past, but those clients maybe aren't as motivated or as serious because they can go to like a buy here, pay now, pay here place, um, in-house financing, where versus the real, the home buyer, they're really focused on, getting that mortgage, and they've kind of prepared themselves mentally, a lot of times financially, but the credit's holding them back. So since the very beginning, I started Texas Consumer Credit Services and grew it with that in mind, of how we can work together with
Mhm.
realtors, mortgage lenders, and ourselves. So even as far as our systems have been developed that way, to where we can keep everyone in the loop. And it's just
Right.
really geared towards, I would say 90% of our clients are home buyers, and we're working directly with, realtors and mortgage lenders. So that's kind of a little of background. That was a little over 10 years ago. And now, glad to say that we work with a lot of, not only here in El Paso, but throughout Texas,
Mhm.
mortgage lenders and realtors like yourself. We've been working together for probably close to
Years.
that amount of
Yeah.
time. So yeah, that's kind of what we specialize in.
Yeah. And and you're right, like credit, oh my gosh, I'm so sorry about that. Credit has such a big impact on our day-to-day just moves, especially the big moves. Um, I've always said that credit is like the adult report card, the adult financial report card. My husband actually refers to it as a reflection of our financial integrity, which is, oh, yeah. So
Yeah,
whenever
and
he's getting on me about credit, he's like, remember, that's a reflection of your financial integrity. And I'm like, geez, but
yeah,
it's true.
yes, it is true. And you're right. It is kind of like a report card, right? Here's the problem and the issues is that most people aren't aware that 79% of credit reports have errors.
Oh,
Okay.
wow.
Whether that be from demographic information like names, addresses. Most people are surprised to find out that in order for an account to appear on your credit report, it doesn't even have to match your social exactly. It doesn't even have to match your name exactly. If it matches a few of those identifiers, right? Say there's another Denise, maybe she lives on the same street, and you have two of the same digits in your social, that can cause a merged file where your account
Mhm.
can show up on that person, theirs on yours, and it's not actually identity theft, it's a merged file.
Mm,
So, a lot of us try so hard to, keep our credit on track, and a lot of times those errors. And there's also things in where, the collection industry, the credit industry, when you don't pay, their job is to try to collect, right? There's a bunch of laws they're supposed to follow and regulations that, again, more than half the time, they don't. So not only we're fighting like a battle on multiple fronts, right? Where we're trying to do what we're supposed to do. And even if you do that, there's still a chance that you have negative accounts on your credit report that are wrong or
mhm,
inaccurate. Right? And that's kind of where we come in. Now you kind of put that along with they don't teach us this, and that's kind of a recipe for disaster. For a lot of people that don't uh, know about credit, right? A lot of
mhm.
people don't really look into their credit until it's a big purchase. Like they come to you and maybe all they've done is check Credit Karma. And they think they're okay, and then you take them to the mortgage
Right.
lender, and they can't qualify. But yes,
Mhm.
your credit score is some of the most three important numbers that you and people don't realize you use it on the daily. I always make the joke of, I don't know when the last time I used the Pythagorean theorem was, right? That they taught us at school, but no one knows
Mhm.
about credit utilization ratios and the five factors that make up your credit score, and those can literally make the difference from you getting a job and not getting a job.
Mm.
And you might not even know why, and it might just be because of your credit report. So
Yeah.
it's important.
So let's dive into that a little bit. I would really love to like start with the basics for anybody that really is just kind of like, hey, I understand I'm an adult, I have a credit score, but that's pretty much it. And then kind of work our way up. So I find that a misconception that people have is they believe that there is one credit score. There
Hmm.
is not one credit score. There are three credit scores. Can you break that down for us?
Yeah, and there's actually hundreds of credit scores. So
Oh,
yeah.
okay.
So what I mean is, so there's different versions of your score. Okay, so all your
Okay.
information, you have a credit report. And then there's different versions. I like to call them scales. So, for example, if you apply for a credit card, a car, and a mortgage at the same time, they're going to be different. Now, why?
Mhm.
So, let's say you own a tire shop, okay, and you're going to extend credit to people.
Okay.
You're looking for people that show a history of always paying for tires. You don't care too much about how they pay other things if they've always paid for tires. So, what does that mean? Let's say you have credit cards and you always take care of them. You know how to manage them really good. But on your loans, right, installment loans, you miss payments. So the score that they use for credit cards, one of them is like the bank card 8 score, is different than like a FICO 2 and 4 that they use for a mortgage. Okay.
Mhm.
The scores range. Some go from 300 to 850, some go from 200 to 900. Some institutions that are really big, like Navy Federal, they have their own credit score. They had
Mhm.
FICO, so there's FICO and Vantage are two big companies. They basically develop these algorithms, right? It's algorithms, and they feed all this data and say, is this
Okay.
person a good candidate? So yeah, it can get confusing, right? Because you've got three credit bureaus, you got all these scores. But the thing to know is that as long as you know the basics, which I can explain those really quick, your score is going to go up in whatever version, right? It just depends, where you started. So don't get so fixated on just that score. It's like do the work, right? It's like if you're working out and doing this, like do the activities and
Mhm.
change things, and the results will come. That the score will change, right?
Right.
So a lot of people don't know, and I always do this, like even on our consultations, most people don't even know the very basic that there's 5 parts to your credit score, right? The biggest part of your score, 35%, is payment history.
Mm-hmm.
So most people know that, right? If you have a late payment, if you don't pay your payments on time, if you've got something that went to collection, the charge off, a repo, that is the biggest part of your credit score. Okay. Now, the second part is, they call it different things: indebtedness, amounts owed, available credit. This is 30% of your score. So it's almost as important as paying your bills on time. Okay. Now, this, let's call it like a piece of the pie, 30%, right?
Mm-hmm.
We're going to divide that into two: credit cards and loans.
Mm-hmm.
Loans are only about a fraction, 5% of that piece. So what does that mean? On loans, really the only thing they're looking at is, do you make your payments on time? The
Mm-hmm.
balance on your loan has little to no impact on your credit score. Okay?
Wow.
So like if you're thinking you give a double payment, or you make multiple payments on a loan and pay it off sooner, that doesn't necessarily increase your score. Now, maybe it'd be good for you to save on some interest if you're buying a home because your debt to income's too high. But I'm speaking solely on the perspective from your credit score.
Mm-hmm.
Credit cards are super important, because credit cards, you don't only have to worry about making your payment on time, but there is this thing called your credit utilization ratio,
Mm-hmm.
right? And that's your credit limits and your balances as a percentage. If you have $1,000 credit limit and you have a $500 balance, you're using 50%.
Right.
Okay? So whenever you're using more than 30, for sure, you're lowering your score, right? And the higher that goes, if you max it out, definitely drops your score. Ideally, you should maintain under 10% utilization ratio.
So how come I hear some people say to stay under 10% and then I hear some people say to stay under 30%?
So it's just getting like, we're getting real particular, right? So the way I explain it to people is, over 30 obviously is bad. We all know that. Okay. Between 10 and 30, you're not necessarily hurting, but you're not helping. Okay.
Mm.
Meaning, if you're at a 20%, okay, and then you drop to a 9%, your score's still going to go up.
Mm-hmm.
Okay. But under 10%, from 1 to 10%, you won't really see a difference. Right.
Okay.
And another thing is, people think that when you make a payment, like it's in real time, your
No.
changes. What happens is,
Mm-hmm.
let's say Capital One, they report once a month to the credit bureau. So whatever your balance was on that day, that's what's on your report for 30 days.
Mm-hmm.
So people they confuse themselves. Like, well, when should I pay it? When I teach people 10%. So what I teach, even from high school kids, is like, if you get a $300 secured card, you find something that you're already paying monthly: Netflix, Hulu, the gym, something, right? That's under $30. You go put your card on that Spotify account. You take your debit card off, right? And then you cut up the card. Okay.
Mm-hmm.
Now you can't use it. Every month, Spotify, they're going to charge you the 20 or whatever your plan is. And now you just pay the credit card. You don't
Mm-hmm.
go into debt, right? And you look perfect because you show that you use it every month, but you never go 10%. So you get 3 cards and you do that, and that's all you need to do,
Mm-hmm.
right? That's probably one of the first things I look at on a credit report. Either they have credit cards and they're maxed out, or they don't have any. Either way,
Mm-hmm.
you don't have any available credit. It's how much available credit you have,
Mm-hmm.
right? So that's one of the first things, we look at. So just those two things are 65% of your score,
Mm-hmm.
right? So just by not knowing about those credit cards, I've seen scores fluctuate 30, 40, 50, 80 points just because of balances. They think they just have to make their payment on time. There's
Right.
people that think they should max it out and pay it all off, right? But now with the new credit scoring models and AI, everything's more advanced. Now they can see how you trend. Like, do you max it out and pay it off, or do you
Mm-hmm.
always maintain a lower balance? So the
Mm-hmm.
lower risk person is always the one that maintains a lower balance. Because, for example, in the industry you're in, real estate, right? A closing falls through, even though like you're like, Edward says I got to pay this card. You can't tell me you're going to pay that card and not like feed your household, right?
Right.
So it's not that you're a bad person. It's just you're not a good financial risk.
Mm-hmm.
That's why I tell people, and it's easier. Just, you got a 300. If you got $1,000 card, you don't have $1,000 card. You have $100 card.
Mm-hmm.
So those are some of the things that, like, we teach clients when they're coming through the program, is how to not only do we fix their credit, which we can get into, but how to manage their credit.
Right.
Hey fam, if you're enjoying this interview and you want an opportunity to chat with Mr. Edward Araujo in person, this upcoming Saturday, we are going to be meeting at the Corner Bakery off of Airway at 10 a.m. So bring your questions, get ready to network, and brainstorm with us on how you can either build your credit, repair your credit, or use credit towards your future business ventures. I look forward to seeing you then. Now let's get back to that interview.
Um,
And I like how you said like you're a financial risk, because I I I've recently had clients that are upset about what's being offered or not being offered to them. And I think you have to look at it from the bank's perspective. And the bank's perspective is they're loaning you X amount of dollars, 250, 350, $450,000 for you to buy a house. They're loaning you that money because you don't have the money. Most people don't have that cash on hand. So the credit score and the credit or the information on the credit report is there to give them a risk assessment.
mhm.
And so for that reason, it's important for us to keep, what did my husband say? Keep our financial integrity high on the credit reports. So I just think it's a good practice to try to maintain the credit up, but obviously, like we're talking about home buying, this goes hand in hand. Like you're not going to be able to do very much if you don't have good credit.
Yeah, I get that, all the time from people like, oh, well, the credit, why do you need? I pay everything cash. So there's two ways to look at it. Like you said, first of all, if you have all the cash, you don't need to work. Okay, then, great, right? But
Mm-hmm.
most people don't, right? They're going to need
Mm-hmm.
to take a loan out, and like the people that say they pay everything cash, that's great, but it's like, if credit's one of the oldest things. It started back in the day when they were trading spices and everything. They used to literally keep like a ledger, and it's like literally like if you let people borrow money and then they come and ask you, hey, did so and so borrow money? Like, yeah, he didn't pay me back. Well, are you going to lend them money when there's like
Right.
20 people, right? So
Right.
there's always been a credit system in place, even though now it's actual data reported and things. But you're right, you need your credit, and some people do get upset of how it works. And I tell people sometimes you don't necessarily have to agree, maybe,
Mm-hmm.
how it works, but the fact is that's the way it works. And if you're
Right.
going to ask to borrow money, this is the way that they gauge your risk. There's also
Mm-hmm.
a big argument on, like, people sometimes are surprised to know that your income does not impact your credit score.
Mm-mm.
First of all, the only thing that can impact your credit score is if it's on your credit report. Your income doesn't report on your credit report. So that's an easy way to just, right? But people always argue with me. I debated with people, well, it should and it shouldn't. But this is the thing. I have clients that were doctors and attorneys and high net worth clients that have bad credit.
Mm-hmm.
They're just not responsible, or they don't pay attention to it. And I have clients that make minimum wage that have perfect credit.
Yeah.
Now, what's going to happen is that's only your credit score. Your credit score doesn't get you approved. It just doesn't get you
Right.
denied. As you know, once you take them to a mortgage lender, they can have perfect credit, but that doesn't mean they can buy that $1 million house.
Mm-hmm.
That's where now we go beyond credit into more finance when they go with the mortgage lenders and they say, okay, no problem qualifying, but you can qualify for 250,000.
Mm-hmm.
So income has no bearing on your credit report, on your score. That's going into how much you can qualify for and things like that. And that's what a lot of people don't know. They think just because they don't make a lot that their credit's going to be better, and it doesn't
Yeah. No.
necessarily work that way.
No. What about like, I guess if you were to take, well, let's start with this. Who ideally would be a client that you could help? So what type of services is it that you offer? Like where could you really help somebody?
Yeah, and that's a good question, because credit repair, or that term, gets thrown around real
Mm-hmm.
loosely, and a lot of people aren't exactly sure what it is. So our services, it's kind of a two-part approach. So the main thing that we do is we fight on consumers' behalf to try to get negative or derogatory accounts legally deleted from a credit report. That we're talking about things that have gone to collections, charge-offs, things like that. And the way that part works is that there's hundreds of laws, like the FCRA, FDCPA, all these laws that are there to protect consumers. There's regulations and things that the collection companies, credit bureaus are supposed to follow. 70 to 80% of the time, they don't. They're not fully compliant. Okay. But they know that the average consumer does not know all those laws and regulations. So they take their chances. They're trying to collect money. They're trying to, so it's like when you see a speed limit sign and it's 30, you're like, man, I'm gonna go 40. I get caught, maybe I don't. Right? They that's what they do. So what we go in and do, let's say it's a legit collection. Something happened like job loss or something, and you couldn't pay it. We go in, we audit, we investigate that account, we try to find violations, errors, and we use that to try to get it removed from your credit report. So there's no magic wand. It's not like claiming identity theft. It's literally using the consumer protection laws back against, the creditors. And the second half is what we were talking a little bit about earlier. Do they need to add credit? Do they need to manage their credit correctly? So our ideal client is someone that, life happens. Something happened, divorce, job loss, sickness, COVID, right? And they had to let certain bills go, right? That they couldn't pay the vehicle. They, couldn't keep up with their credit cards. They got some medical bills they didn't have insurance and they're crazy medical bills. Now they're back on their feet. They don't know how to fix it, or they've tried to go buy a house and they're in the 500s, and, your credit pretty much stays like that for at least 7 years. So that's a client that would be an ideal client for us, right? To where now they're back on their feet, because we also can't help a client that is currently struggling financially.
Okay.
Right? Because if you're currently making late payments, there's nothing we can do to fix that until you get current, basically.
Yes.
Right?
And
now we can
yeah,
but maybe they're
I
not ready
do
to
see that.
Right?
Yeah, I do see that, where sometimes people are in a financial struggle and they want assistance, but like at the end of the day, you have to pay your bills. And I think if you cannot pay your bills because you are not making the income for whatever reason, then that might be more of like a credit consolidation or a bankruptcy type situation, right?
Yeah, that's where we have to evaluate it. So a lot of people don't know what they need yet, right? So we'll have clients coming to us that don't have bad credit. They're just, their credit cards are astronomical, right? Their minimum payments, they can barely give the minimum, and giving the minimum, their car's never going to come down. It's going to take them 30 years, right? So that's something different, right? Where we can refer them, or we got a lot of free resources also on, a lot of times you can get a loan out for that debt, fixed interest rate, fixed term. That also helps your credit score, because remember, balances on loans don't count towards your credit score like credit cards do. So just by moving that same $10,000 to a loan, your score jumps.
What type of loan do you mean when you're talking about?
So any person, like a personal loan, like if your credit is still decent, right? Like let's say you don't have negatives, you still pay your credit cards on time. You're just maxed out, and you can only give that $800 a month payment. And if you give that, your credit card never goes down. So you can sometimes apply for a personal loan for $10,000. Let's say you pay off the credit cards, okay? And usually the interest rates are going to be lower on those loans, and the interest works different, right? Like credit cards are, like they're multiplied daily, compounded, I should say, daily, and certain. So that's why you can never pay them off. Versus, a loan being kind of like amortized, right? And you kind of know where you're going to be at every step, and you have an end date as long as you give those payments. You can do that, and it helps your credit score, because now we're shifting that debt from revolving to installment, and installment balances don't really hurt your score like credit card balances do. So sometimes it's just that, right? Sometimes people, is it the right choice to claim bankruptcy? Sometimes people think that's going to fix your credit. That doesn't. It gets rid of the debt, but you may need to do that and then come back to us and help us, clear as many things as we can off. So the consultation is always really important, because there's so many different scenarios and situations, and every person's credit situation is unique. So that's why we stress the consultation, so we can sit down one-on-one with someone, go over their situation, and maybe we can help, maybe we can't, maybe we can just guide them or direct them, where they need to go for help.
Right. Yeah, no, that's true. And I mean, same on my end. I offer a consultation, and I think the big thing is like everyone's different. Everyone's situation is different. Everyone's goals are different, and we want to put this information out there to give everyone just like a general information and just an understanding of what we can help serve, like in what area we can help serve in. But at the end of the day, a consultation is definitely best.
Yeah. Yeah. And if you're out there and you know that, you didn't pay some things, they went late, they're probably in collections, or you've seen your score on Credit Karma's in the 500s or something, that's probably someone we can help, right?
Mhm.
So that's kind of, that's kind of usually the people we get, they go with you and then they go get pre-approved and they're at a 550, right? They tell them, you've got a couple collections, you got this Verizon bill you didn't pay, this medical bill, things like that. Then that's where you would refer them over to us and we'd have a consultation and go from there.
Speaking of medical bills, I heard somebody say this recently that medical bills cannot go on your credit report. Is that or is that not true? Fact or
Well,
myth?
so there's a lot of stuff going on up until even recently, about a week ago, where Trump fired the director of the CFPB. So there's always been rules with medical bills that they can't report until like after 6 months because, insurance wouldn't pay. So it'd be all mixed up, right? So most recently what happened was the CFPB said that can't report medical bills at all on a credit report. It passed. Then they got a lawsuit filed against them by a lot of trade organizations saying that that's not true reporting. So it got stopped. Then Chopra, which was the director of the CFPB, was just fired. Now the replacement. So everything's just on hold. Now, even before all that, what I tell people is, because you hear a lot of things on the news, social media, there's already a lot of laws in place with HIPAA and a lot of things, right? The problem is that the credit bureaus and the collection agencies still don't follow them. Like, that's literally why we exist as a credit service organization, because if all the collection companies and the credit bureaus followed all the laws, we wouldn't exist, right?
Right.
The problem is that they don't. So yes, it's great when there's new legislation and new laws. Obviously, that gives us more leverage, but we still have to go through the process. So what we do is, like, we represent clients, right? So we're the ones who are going to, initiate the communication with the collection agency and escalate that. And the hard part of what we do is, the easy part is finding these violations. The hardest part is getting credit bureaus and collection agencies to comply, where we may have to escalate, potentially to legal action.
Mm-hmm.
So that's always a step in the right direction when there's new legislation. Just people shouldn't assume that like overnight, like things are going to happen, because it's a long process. It goes through, a law passes, and then they still got to enforce it. There's certain laws that they don't enforce too much, without getting too much into politics. That's what it is a lot of times, right? With credit card companies and collection companies, and because we're not the credit bureau's clients. The credit card, the creditors pay to report on your credit report. Like, you are the only one that benefits from you having good credit.
Right.
The credit card companies and they benefit from charging higher interest, right? So yes, that's a good step in the right direction. Medical bills, and I've always kind of been an advocate of that, because to me, there's a difference. It's a different type of person who racks up a $50,000 credit card versus $50,000 medical debt. Okay. And the new algorithms, the credit scores, are getting better at that. Like the old mortgage algorithms, like they measure those the same. Like $10,000 collection, $10,000 collection. The new algorithms, obviously with new advancements in technology and AI, can differentiate between a medical bill and a credit card bill and weigh them different.
Okay.
That's why some of your newer scores will be higher than like a mortgage score, because mortgage scores are over 20 years old. They still use those old versions. Now there's new versions that they've already got approved that can be used for like FHA, Fannie Mae, and Freddie, but it's a long process for them to. They got to like almost beta test it, right? Because they don't want like a 2008 happening, like, oh, now with all these new credit scores, everybody's approved, and then we got all these foreclosures. Right? So there's a lot of laws, and there's always things changing. That's one of the things that we do, is we keep up with that a lot. So it's good. We're a big advocate of changing a lot of those things, like with the medical bills and how certain things should be reported. Like they want to report a lot of these buy now, pay later type of things. So yeah, there's changes going on now. It seems like daily, right?
Well, and that's one of the benefits of having somebody like you on our side is basically like it's hard to keep up with all of these changes. So, yes, we do benefit from having a conversation and just, allowing you to take over that section of our life, so to speak.
Yeah. Yeah. And that's what I tell people, we all have a specialty, right?
Mhm.
Like if they're talking to me and they start asking about rates, I'm like, well, that's something for the mortgage lender. How much can I afford me? And they're like, well, what area and how much should I pay? I'm like, well, that's Denise. That's for your realtor. I talk about title. So we all have kind of our specialized,
Right.
our specialty. And that's why I like working, like, have almost a team. Like you have your team, right? You have your appraisers you work with, your lenders you work with. Because at the end of the day, it's about helping these clients, get to a home. They don't know where to go. They don't know what they need. They don't, and they do need our help. And it's because I know that I have people I can call on, like, you, for example, like if I have a client and, they're looking at this house and might get a rough idea, like, well, that's kind of seems overpriced, but let's send them to me. Let's talk about it. Or,
Mhm.
or if they have credit questions, so it's always good to have those people that you can bounce things off of.
Yeah, for sure. And I think like obviously we're talking about on the real estate and the personal end how credit can affect you. Uh Early on when I got into the real estate space, I was trying to learn about, how do I invest and how do I, you would hear this term leverage getting thrown out left and right.
Uh-huh.
And you got to leverage this, leverage other people's money, leverage your credit, X, Y, and Z. And it took me a little while to kind of figure out what they were talking about. But I guess to kind of shift the conversation a little bit, you I really do genuinely believe that you have to master your own personal credit, because if you want to use credit in the future for like maybe business ventures, it's a very similar setup.
Hmm.
And I mean you can speak on this better than I can, but it is a very similar setup, and you can benefit from having it's not a credit score, it's a, what is it called?
Well, you have a credit score, but it's so you have like a paydex score is the most popular one.
Hmm.
And that's through like Dun and Bradstreet, right?
Yes.
Um, so yeah, you're right. It starts from, like you said, your personal credit and business credit. Like if you can't manage
Mhm.
$100, you probably can't manage 1 million, right? That's
Right.
now business credit, and that's a very interesting thing, because business credit is something totally different, right? So personal credit is built off of your social, right?
Hmm.
Business credit is built off of the business's EIN.
Hmm.
So the biggest mistake most small business owners make is still being a sole proprietor. So everything is still, they are the business.
Right.
So they think just because they have a credit card and it says the business name, no, they still personally guaranteed it. Like it's still them. True business credit is when you become, either an LLC, an LP, a C corp, an S corp, and you build credit on that EIN. Okay. The problem is that big companies have CFOs and people that studied economics and finance do this for them. The small business owner doesn't. Business credit's actually easier to build than personal credit.
Mm.
Business credit doesn't have those 5 parts. Like there's no such thing as utilization in business credit.
Really?
Yeah, because that's the nature of business, is you're buying raw material or product, or you're buying a product to resell. So you're maxing out those credit lines and you're selling. So that doesn't have an impact. It's not as simple, but it's really, how many credit lines do you have that report, right? What are
Uh-huh.
those amounts? And do you pay before time, on time, or late?
Mm.
Scores usually go from 0 to 100. 80 and above is like a good business credit score. Right?
Okay.
The problem is that business credit's not automatically created. So I've had people that have been in business for 20 years, let's say a general contractor, and they buy material at the material houses, and they've got credit, $100,000 credit lines, right? They're buying lumber and cement, all this. They're like, oh, I
Uh-huh.
got credit. But that material house doesn't report to Dun and Bradstreet. They don't report to Equifax business data. That's like you telling me, oh yeah, I borrow money from my friend all the time. And I'm like,
Yeah.
well, that's great, but it's not, you can't track that, right?
Yes.
So that's the thing, and learning how to build business credit, because once you build business credit correctly, you don't put your social anymore. for at least
Mm-hmm.
a very minimal amount. Now that's a business asset, business liability. Like if you sell your business, and if you're just a sole proprietor, you're not going to give that person your credit card to run the business, right? That you
Mm-hmm.
sold them. But when it's true business credit, whoever controls that business, the EIN, controls that credit card, right? When you sell a business, you sell the assets and the liabilities, and you take on the
Right.
credit lines and things like that. And it's also separating you from the business. You need to protect yourself,
Right.
right? So we do offer that. That's like our other part of the business is we consult small businesses, and we have a whole program, business credit builder and fundability, that can take them from the very first step of, do they even are they registered right? A lot of people don't know that if your phone number isn't registered with 411, that's a red flag with the banks. A lot of these voice over internet numbers and things like that. And the thing is, the
Mm-hmm.
banks can't publish their terms. It's illegal. So
Mm-hmm.
they just tell you don't qualify. So what we've done,
Wow.
our system, you know what like fractional services are, like kind of like a lawyer has different clients, right? And a
Uh-huh.
CPA. Well, normally big companies have a CFO that does this.
Right.
Small business can't hire a six-figure CFO. So what we've done is kind of taking people that have been at JP Morgan, all this, and kind of made it to where you have like a fractional CFO in a way.
Mm-hmm.
So you start in the program. If you've been established, you'll fly through some of the first steps. What's your LLC address? And then it's making sure that everything matches. And then we start helping you build your business credit, where to
Mm-hmm.
apply the reports, all the way to where we get you to an 80 and over. And then
Mm-hmm.
you can start applying for financing. So it's really not that complicated. It's just, again, not taught and not accessible normally to the small business owner. But that's
Right.
what all the big companies do. Like, you don't think Tim Cook is putting his social when Apple's applying for a credit line for
Yeah.
microchips. But no, like Apple has the credit, and you can do
Yeah.
that as a small business owner. It's just knowing how.
Yeah. I love that. And man, like I feel like I could just dive into that so much, just because there's so much opportunity there and there's so much opportunity that's being missed. And I know on the surface credit can seem very, very boring, but in reality there's so many benefits and so many opportunities available if you understand credit and you use it to your advantage, to then leverage for whatever it is that you're trying to do.
Yeah.
So I really appreciate that. What we're gonna do is we're gonna have you over to our next coffee and contracts, right? That's on the
Yes.
15th. And I'm really excited about having you out because I do have a lot of entrepreneurs, business owners that come to these meetings. And so yes, we'll have some people that are, trying to work on their personal credit to get into a home. And then we'll also have some entrepreneurs, and I think it'll be a really good conversation. So I think this is actually a good place to stop. I'm going to put all the information in the captions. I'm going to put your contact information, which, by the way, what is the best way to reach you? What's your preferred method?
So there's a couple of ways you can go to our website, texasconsumercredit.com. My email address, Edward at Texas Consumer Credit. You can put my phone number in there, the 915-974-2477. That's a way to reach me. A lot of times, if you reach out by those means, it may be, someone on my team, but that's the best way to reach out. Social media, everything's going to be at Texas Consumer Credit. Mine is at Edward Araujo, so it's not a common last name. So we try to do a little bit of everything. You can probably find me, like even on Amazon. I have a book that I wrote about 8 years ago that's on there that I need a
That's
new
right.
update.
That's right.
So a lot of different ways, but definitely I like meeting, one-on-one. So, tell your people to bring their questions. A lot of times
Mm-hmm.
I don't know what they don't know or what they want to learn about. Like you say,
Mm-hmm.
there's so much. I could probably talk for a month straight,
Yeah.
all day about different things. So definitely, bring your questions. We're working on a pretty cool new tool for business owners. We can run kind of like a fundability scan, kind of like a pre-approval almost, and let them know where some red flags might be, where they can get some help.
Very cool.
People with personal credit. I know it's a touchy subject sometimes, so that's why we do a lot of one-on-one. Like when I give classes, people don't want to share a lot of information. But if they want to bring their credit report and get like a free consultation or review it with me or someone on my team, by all means, bring that. But more than anything, bring questions, because there's so
Yeah.
much information out there that they're getting from TikTok or social media. Some of it's good, some of it's horrible. right? So, bring questions. That's usually the best way.
Yeah, for sure. And I think ultimately our goal is to help you, the viewer, hit your goals. That's really how we win, is helping you hit your goals. And I'm sure you feel the same way, Edward. Like after a while, we're on this roll of like helping people hit those goals, and it feels good. That's
Yeah.
it's a good feeling to be able to see somebody, feeling maybe somewhat hopeless, and like, no, look, we got you. Let us help you through this process. And I will say I have referred friends, family, clients over to Edward and his team. We've been working together for years now. And so, if credit is where you're struggling, like I said, I'll put his contact information in the captions, and then we will have a meet and greet type thing later this month, and I'll put that information there too. So if you want to meet him in person, definitely you want to come out to that.
Awesome.
But
Yeah.
that's all. Thank you so much, Edward. I really appreciate all of your time, all your information, and I'm really looking forward to chatting some more with you.
Yeah, definitely. By all means. Appreciate
All
it.
right. We will be in touch.